one thing that I was actually looking at the other day, and one thing we were just talking about before, is that there have been so many people in the last couple of years that have become they're new to investing and they're getting into the markets and whatnot. In fact, I had a stat here that I saw the other day, which you might find interesting. In Robinhood's latest quarterly filing, they've added 12.7 million users in the past 12 months, and they only have 22.5 million users total, which is pretty insane. So, and I'm sure you get this all the time. Friends come up to you, subscribers even come up to you and say, Jaspreet, look, I want to get into investing, but I've never done it before. What's your how do you explain to them how to get going? What's your tips, your pointers, your advice that you normally give to those people?
The worst question that you can ask is, what stock should I buy? Because you're ignoring everything else around it. What's a good stock for you might not be a good stock for me, and what's a good stock for me might not be a good stock for you. So a stock can be good or bad just depending on what your strategy is. And that's where you need to start. You need to understand what your goal is, and based off of your goal, you can come up with a strategy. So what does that mean? Because everyone assumes that, what are you talking about, man? My goal is I just want to make some money. Okay, well, let's break that down. Do you want to make money in the next 3 to 6 months? Or do you want to make money over the next 3 to 6 years or 30 years? And, especially if you're younger, you might assume that the sooner the better. What you talking about? Well, fine, but that comes with added risk. Traders take on the most risks. Somewhere between 80 to 90% of traders will lose money in the next 12 months. Overall, you're going to be at a loss. It's just, these are stats. I'm not a trader. I like investing my money. Investing my money means I put my money into a ETF or a stock, and I hold on to it for a long time because I want to invest in something that I believe in, that I believe is undervalued, and I want it to grow. And in order for it to grow, I need to give it time. And you're going to see wild fluctuations. You might see it go up and down. Traders move the market in the short term. But over the long term, it's all about the real fundamental values of the company. So that's the first thing you got to understand is kind of where on the spectrum do you want to be. And then you got to ask yourself really how risk tolerant are you? Because if you're 22, 25 years old and you don't got that many financial responsibilities, you might say, hey, I'm okay taking more risks. So you might be looking at growth companies and more startup type companies which don't have any profits, which have the opportunity to grow a whole lot faster because they're investing every single dollar that they earn back into the company, and maybe more. They're taking on debt, they're taking on more investments. That way they can grow in market share as fast as possible. So you have the opportunity to see a lot of growth in the stock price in the next 3 to 5 years. But on the downside, there's also a chance that they'll fail. So, if you're okay with that risk, then that's something that you can do. Versus, let's say you're not okay taking that much risk. Then you might be looking at blue chip stocks or ETFs or something else that's a little bit more stable, because now you don't necessarily need all that potential upside. You just want something where your money's safe and you get decent returns every single year. Or maybe you're that person that says, I just want to invest my money in the market, but I don't want to do any of the work. That's fine. You just have to be honest with yourself about that. Then you can look at ETFs. An ETF is an exchange traded fund which gives you exposure to a group of stocks. Now you can just invest in an ETF that gives you exposure to the biggest 500 companies in the stock market. So, you have ETFs out there that give you exposure to the S&P 500. Now all you got to do is put your money into that. You can do it every week, every month. There's apps that let you do this free, automatically and passively. You just put a little bit of money every single, whatever you want, week, every 2 weeks, every month. And now you're just putting your money in the market and you're letting the markets do its thing. And you're going to do this whether the market goes up or goes down. So it starts with the education. And this is one of the things that, I'm always talking about. We don't do stock picks on our channel because it doesn't do anything. I mean,
it doesn't help. Yeah.
It doesn't help. Yeah, maybe you'll do well in 2 weeks. Maybe you'll do horrible in 2 weeks. But I'm looking at things for, a certain time frame, for a certain horizon. But you might not have that goal. And I do not want to lead people into buy this, buy that for the hype. I want to give you the tools, the education that you need. That way you can go and make the right decision for yourself. And this, I was talking about the academy, right? We call it the Stock Market Insiders. That's exactly what we do. We teach that fundamental analysis every week, where you might learn how to read a cash flow statement or how to read an earnings call. And because these are live sessions, you're going to learn, okay, maybe this week is how to read a cash flow statement. And then you might go over Tesla's earnings statement if that came out this week. So you'll go over how to read a cash flow statement, then you'll read Tesla's cash flow statement and understand how to apply it. This is what, I'm trying to help educate. It's that education on how to make the smart decisions. That way you can make the smart decisions for yourself, or at least more educated decisions.